Hi, my name is Felix Frey.
And I'm Marco Rajnica.
We're here to find great trading opportunities that target 150 to 400% returns. And you? Well, you're going to help us do it every single day. So welcome. This is the Winning Picks Podcast. This podcast is for educational purposes only. Options Geek LLC is not a broker-dealer. Options Geek LLC, Felix Frey, and Marco Rajnica are not registered investment advisors. Keep in mind, options involve substantial risk and are not suitable for everyone. Please consult your own investment advisor before doing any trading. Make sure you read the full disclaimer at the end of this episode.
Hey, Felix.
We made it. Almost the end of the week.
Yes, we did.
Good. How are you doing today?
Doing
400, 4,000, down 4,000. What is it?
Right.
S&P 400, 4,000, SPY, almost 400. I mean, We're on our way, right?
Yes, we are. And I want to use this
in the background. It's
right. I want to use this opportunity to say that CHPT trade that we saw was good for me. I got a one lot for today, and it was
good.
I got in at like
you
90 cents.
You found that.
Right, so like
I hate
$2.
those names, by the way, but you found that. That was good.
I was like, let me throw some chips there, and came back. So,
Very good.
That was a good one.
I saw that it was up today. I did see. I didn't realize that. Okay, so you put a one lot. That's good. You know that look. At the end of the day, we're looking at a number of different things, but the ones that everybody has different ways to sort of. We can all analyze it the same, but at the end of the day, someone might say, I like this more than the next, or I like this one more than that idea. And so that's great that you took a shot at it. It's good to learn anyway, to see how it happens, because the stock was actually in the morning, it was up a lot more. In the morning, it was a lot more. And then you could see how it comes in. A lot of the people got to get out of calls. Everybody's in calls. So when everybody's trying to get out at the same time, it's going to depress the stock. So it doesn't mean that the stock can't go up. This is why the stock goes down today. And then maybe if the market's up next week, the stock might resume a move up, because everybody's trying to get out of these calls for today. So that's interesting.
Exactly.
I like that. That is cool. That is very good. Felix sacrificing Yeke. Yeah, exactly. Jericho, baby. Hey, we got to get a new catcher. Anybody got a catcher for me? This guy is Sanchez. I used to love the guy, but anyway, okay. So the market, I gave you a link. I said to read over the weekend, but you should put the link for everyone. It's their homework for the weekend. I think it's a quick piece. I think it's well written, and I think it has some valid points. And it's about risk management. He quotes Seth Klarman right at the beginning, and Seth Klarman is the manager of Baupost, a value-based firm, essentially. But I think it's good, and it's things that people should understand. So that's your homework, and if we have questions, we could talk about it next week on Monday or so. Let's talk a little bit about price action. So we can look at the SPY, and I think everybody. I mean, the news is that this thing is looking good. I mean, right? The thing's trying to break through 400 here. I have no idea whether it does or not, but I would say that we're looking at, if you want to make a case for where things could go, or what I see here is, we're looking at a 3-month chart. We were looking for at the end of the month type of drop here because of selling. It didn't happen, which means there's buyers here, and the machines came in to buy it. The guy we talked about, the JP Morgan quant, who's I guess head of I think he's head of something big over there, but he was saying that there might be more quant buying because the VIX is lower, and that would attract in more investors. Turned out to be pretty spot on, it looks like. We'll see how that trades, but 400 is a big test. But I think that just looking at the SPY here, you got to respect, you got to now really respect this. You got to respect this. So I'm looking at this move from 370. The reason I was saying 410 was because I'm looking at something like 370 and a half to where is this? This is about 360, 396 and a half. So you're talking about 25 points there, 26 points. So call it 26 points from here to here, right? You got that?
Yep. Okay.
Right. and then I'm going to take this low at 384. So what's 384 plus 26?
400.
410.
410, sorry. Yeah,
410. 410. Yeah, so we're going to be 410. So you would get this A, B, C, D. It's this move that we've been talking about. It could be a move to the upside. That's where I got the 410. So if we're taking notes here, 410, I'm looking at 410, 405, 410. And then on the downside, these things tend to, if it actually hits, it could bounce off that and then shoot to right around here. See get a little bit below this to 380 before it starts making another move back. That's how these things, I think theoretically it's supposed to work. Again, not an expert. I know the basics. That's all I care to know. But I would say that my risk reward now is a little bit, has moved up from 370 more to like 380, 380, 400. So as we are, and again, this is how I'm going to talk a little, this week, as I guess we've been talking a lot more about risk management, risk reward, and how the big guys set up. I would be moving my sort of base or near-term base towards the 380 mark and 410. So 380, 410, that's 30 points. Okay, so that's 30 points. So if I had we're going to call this, it doesn't go that high. So if I had this is my risk reward sort of barometer, right? Then this is 30 points. We're at 400 approximately. So there's 10 up, 20 down. Okay. If it gets to 405, 406, 407, if it gets up here or right around here, right around this range, then man, I'm going to really be excited to get long some puts and play that downside, right? I'd have to see the way the board looks, but that would be pretty exciting. Here right now, I'm looking at, this is breaking, this broke the other today, this level.
Yep.
Okay, this was sort of resistance, kind of broke that. Good volume, first day of the month. Yesterday we said was usually positive. Call it 6 out of 7 times. And second day is usually positive as money's flowing in for the beginning of the month. And, so we're leaning on this 397, but 400 is a big mark. So we're kind of in this 5 to 6 point range was not much to do as far as, getting overly bearish, but get me to 405, 406. And you could see that if this is the way I'm framing it, okay, the frame doesn't necessarily change just because I'm moving up $2-3. We're using the frame today, doing our analysis, saying, okay, at 405 to 410, I have to start getting a little bit light up here for sure. If this turns today at the end of the day, then I'd get, I'd say, okay, maybe tomorrow on any push to 400 again, maybe I'll start hedging a little bit up here. But this is how I think about it. Again, it's just a framing mechanism that we've been doing. And I would say that we're getting to that danger zone between a long-term. Remember the frame before was 370 when we were around here. Right? When we were around here, we were thinking around 370. So we had the 390, 370 put spread for a while. So the 370, and then if it broke 392, we were thinking, okay, 370, call it 400, 402. Now that has to move up because we're breaking sort of resistance here, and we have another pattern going up. Does that make sense?
Yeah, nice.
So as the market's moving, we're trying to find those patterns to find whether or not we can actually, shift our sort of base level and our height. And in right now, I'm looking at more like 384, 410, and we're at 400. So a little bit towards the top, And if you wanted to buy some puts early here, a little bit, it's not a bad call, I don't think, especially right now. We can talk about the Winning Picks premium portfolio. We look, the last 6 weeks, I would say it's been, trying to scratch and claw and trying to just, I'm happy to be, I say this a lot, I'm happy to be flat on a month. I'm excited to be flat, right? Flat means what? Flat means we survived a tough month, right? And if you're flat, month 1, month 2, month 6, month 8, month 9, there's going to be months 3, 4 out of the year that are going to be blockbuster months. We just went through December, January, blockbuster months. People probably made 50 to 80% ROI, whatever they're putting in, they're probably making that much. These are big moves, big months. You're not going to make that every month. In a month like this month, we're trying to scratch. So we had ARC puts, we had SPY put spreads. SPY put spreads, they didn't work likely. If you got out of them and because on the dip, great, the more power to you. But they didn't work for most of us. And the ARC puts should have worked. The ARC puts should have, made anywhere between 125 to 200%. Okay, that's where it should have. They should have made. People should have made money, and that should have knocked out 3 stops. That should the equivalent of one winner like that knocks out 3 stops. And again, that's how we're playing the game. We're slicing and dicing, scratching and clawing, whatever you want to say. We want to be flat in months like this where it's very difficult. It's very choppy. It's up. The market's up 3%, down 4%, up 3%. So these are the things that I think it's important for people to understand and how to play it. Because once you get this through this choppiness, all of a sudden you get a day like today and things are starting to like really do well, and everything's coming back, and things are, if you stayed in pins for a while, you had to take a couple of grueling weeks, but now it's looking really good, and we're going to see some unusual options activity today that's sort of giving you that clear skies ahead sort of mentality. Again, we're not going to be right on every trade, by no means. In fact, I'm only trying to be right 35-40% of the time. But if we can be right 35% of the time, and take out 150%, and when we're losing, we're just knocking things out, then that's going to be a big winner over the course of a year. When we're looking at, like, somebody sent me an email about CSTM, and I in my mind I laugh. CSTM is like, it's like dead to me. Literally dead to me. If it's a stop, it's a stop, and I'm not gonna. I was talking to someone, and I said this, and I said, yeah, it's about right. This is probably the analogy I use. If you invite people to dinner, and you're having a nice time around dinner, and some guy just starts taking plates and throwing it and acting like a maniac, you throw him out of your house. 2 hours later, you don't go, should we call that guy back in, and sort of like, no, it's like, he wasn't playing nice. So, losing stocks, not playing nice, get out of portfolio. You're no longer in, and you're not allowed. And I don't even want to look at you. You disgust me. That's the mentality. The mentality is don't fall in love with these things because it looks better. It's 10 points lower, or it's 5 points lower, or it's 50 points lower. It's still the same characteristic of the guy who came in and broke things right in your house. And you're like, get out of my house. Meanwhile, the person who's, having a sip of wine with you, drinking, smoking cigars, whatever you do at a dinner party, you're having fun. Stay a while. This is great. This is, good time. You nurture those people, right? Same thing with those stocks. You're watching them. The minute they start acting like, they don't want to be there, get them out. Okay. They don't want to be there. Get out. Okay. We're on to the next one, because when you start, and then, by the way, when you're hitting the 100, when the guy has too much to drink, and it's like, okay, you want to end it in a nice way. Okay. Let me call you an Uber, and you're out. By the way, Uber's trading great too, so got to support Uber. But the point is that we are, in and out, trying to just manage the winners, manage the losers, and over time, if we're using a good process, we're trying to spot the right trades, and over time, those right trades should pan out. It's just, when people show me that they're having trouble on a winning month, and I ask them very specific questions, and I get the wrong answers, I say, that's the issue. Like, you had a 250% winner, and you told me that you're still in it, and you never took a dime off the table. I can't help you. I can't help anyone who doesn't at 100% or 150, wherever somebody wants to put it in. That's where they got to start taking some off. So, that's where we are. The SPYs, I am looking at it. I am looking at thinking about hedges. Okay. I'm looking at the portfolio. I'm looking at, that's the SPY. So we outlined the SPY. We have a gold name that got off to a good start, has retreated, but I'm looking at, I look at gold as well. I see what's going on in gold, and I can tell you gold. Let's get back there. Gold looks interesting to me. The chart looks interesting. You have 3 months here. Let's go back a year. So this is gold, and what do I see here? So, I'm looking, we got long some gold stock, okay? So we're long a gold stock here, and we, the gold is getting killed, frankly, last 8 months. But there is, people, there's gold bugs. There's people that live and die with gold, and they believe new monetary policy, new monetary system, ultimately, if it has gold, this thing trades, 400, 500, but how long will that take? Who the hell knows? But at here, you're talking about this drop from 194 to 158. And let's go back a little bit just to, sorry, I should have done that. Let's go back to 2 years just to see what 2 years looks like. Okay. So you have 2 years here and you see where gold is coming from. And you see this big move, and it had to digest this big move here. So we've been talking about this and this this is a big move from 140 to 195. It's back down to 160. Okay, we talked about the Fibonacci retracement. Let's call it from here to the top. And you see where the 61%. I told you 50%, they usually take a stab. They took a stab here, 50%, 50% again. Again, it trades through. We talked about how it should bounce. If it doesn't bounce, it starts trading again. A lot of times it cracks through. Okay. Right. So that came down. We're at sort of this 61.8% approximately. And, it bounced once, bounced twice, and this is the second bounce. Now, to me, that is a positive development. It's trading well today. But also what I see is, you see this low here? Oh, sorry, I'm still in Fibonacci. You see this low right here? So I'm always looking at the MACD, and I'm looking for, just like we did it on the way up, I'm looking for MACD diversions on the way down. I'm looking for that. They push it down, and here, they push it down here. Okay, first time, they push it down here. There's the MACD. You see where the MACD is?
Yep.
Low. Then they push it down here. You see where the MACD? Lower. Okay, so it's still under pressure. It's still accelerating. The MACD is going down. It's being pushed down. And then another MACD down here, lower. But now it tried to make a low here. Again, it tried to quickly go down. And the MACD's kind of moved up a little bit. So it's a little bit different this time if gold could get its head above sort of the 162.5, 165. You see that change?
Yep.
You see where the MACD was when it starts like moving lower? So it's low. Got to have a little bit of imagination to erase all this, but you spike, you go down, there's a MACD right around here. You spike down again, there's a MACD lower. You spike down, there's a MACD even lower. You spike down even lower. You spike down quickly here, and then it shoots back quickly, and that changed a little bit there.
Yep.
Okay, so to me, and you can also see, look, the RSI, see how it's going a little bit that way. So to me, there's something might be going on a little bit here now in gold, and we're long Newmont, and it traded well right out of the gates, pulled back here, but still long, and that's a name that, this gold goes from 157 to like 175. Forget it. The gold miners are going to, rock and roll for, a good 25%. So this is what I'm, how I'm looking at the macro, how I'm looking at SPYs, how I'm looking at the world. 400 is a big level in the SPY. If you want to put in a little SPY hedge right here, that's fine. I'd get a lot bigger in SPY hedges towards the 405, 410. Show me a breakthrough to 400. You get everybody looking for, the upside. And then, right now there's still, I would think if we asked everyone, I think there'd be non-believers. You want there to be all believers. That's it. This is the moonshot. So this is something that I think is starting to be a little bit interesting. Okay, cool. So SPY 400, 405, 410, gold starting to turn here a little bit. It looks like. Okay, and I gave you sort of the strategy around the portfolio and making sure that you're taking your gains, you're taking your losses, and ultimately one big gain, if it knocks out 3-4 losers, that's a win. That means you had 4 cracks at the bat, 4 swings at the bat to hit a home run, and you're still alive because one did okay. Okay, so that mentality is very, very important. Very important. Okay, good. How about what else are we looking at?
I think you mentioned QS recently. That you want to talk about?
One thing? Yes, I wanted to say QS. I told you that that this is what's interesting about QS here. Again, is that we've seen call buying. So we've seen call buying. Wrong side of the mountain for sure. So I'm not go hung about this. But what I will say is this: there was an announcement here about a secondary offering. We were right here. Let's shorten this to get it a little bit. September, so was that 9 months? 9 months. QS, we were right here, and they were buying calls. Okay, they were looking for calls, big calls up here. Okay, and unfortunately, 2 days later, bam. Maybe it was even here that we were looking at it, and then bam, secondary offering announcement. So they sell, I think it was about 10 million shares. They actually sold them down near 40. Now, why does a company issue stock? Company issues stock when they need cash. They need cash to either run their business or get to a product launch or whatever it is that they're low on. They're low on cash. Many times when there's a secondary, and perfect example is Viacom. Okay, Viacom stock goes from 20 to 100, and Viacom does what? They announce a secondary offering that is going to sell stock, $3 billion worth of stock. Stock went from 20 to 100. That's perfect for them, right? Then there's something where there's a stock like QS where it's very long term, 4 or 5 years out. They do need some money. They had some money, but they wanted to fortify it with the stock price here. And the stock's already come down a lot. Not saying they can't go lower, but come down a lot. A lot of times when it finds this sort of level, which it has here, 42, it's sort of found this like volume here, got some volume here. Looks like 40 to 45 is a range where people seem to think there's value. You get, the only way, remember we've talked about this past, but the secondary offerings, the way you get the big money in, they don't want to buy their first tranche in the open market. They don't want to always be chasing, $100 to go pick up the stock. They got to buy 10 million shares. They got to buy 3 million shares, 2 million, whatever. They want the company to give them some stock at a cheaper price, at a discounted price. So this may have been a reverse type of secondary where, someone who wants to get into QuantumScape says, I'll buy it, and we're going to buy 20 million shares over the course of the next 2 years, but we'll support the stock. But I'm not going to pay it in the open market. You got to give me a little bit of give me some of the goods at a lower price, right? That's sort of like what I want. And that's where the bankers approach the companies, and they ask the companies, hey, we got a buyer stock. He's big, and they're pitching the companies, and the company has to decide, do we want, let's call it BlackRock, in our stock? Right. Most companies do, because BlackRock has infinite amount of money, and they'll support their stock. They're not buying it. They know what they're buying. They're buying a 10-year option, and they know what they're buying. They don't care. They don't care about 2 weeks, 2 months. They know that if this battery works, the stock is worth $1,000, maybe, whatever it is. And I can buy it today for 400. Okay. And for 40. And if that's how they're looking at 10 years, it's like looking at a $4 stock, or $4 option that you think can go up to 100 in 10 years. Okay. Why not maybe take a stab at that or look into that? Yep. So nobody's putting in 50% of their portfolio, except Stanford has probably a lot of it now, but nobody's putting that much. But they're taking, you got $1 billion fund and you want to buy 1%, it's still 1% of $1 billion is still $10 million. $10 million of a $40 stock is how much? I think that's
how many shares are?
How many shares is $10 million of a $40 stock?
250,000
shares.
Yeah.
So some of these guys, it's not 1 billion. They have a $5 billion fund, or BlackRock is however billions, So they need to buy 5-10 million shares. So here they'd say, okay, give us 1 million shares or 2 million shares, and we'll get going. And that might be what we saw here. That might be. It seems like because you're looking at 40, if it trades all at 40 and it never traded below 40, that means the people who bought this, they're not. A lot of times on these secondaries, people buy them and they sell them. They buy them, that goes up a little bit, and they sell it. It looks like the people who bought it here were long-term holders that will be supporting this stock. And if you want, this is one of those names. If you have like $100,000 portfolio and you say, all right, I'm going to take $1,000 and I'm going to buy, 25 shares, 25 shares for $1,000, then you own 25 shares and you never look at it. And it's one of those names in 10 years, it becomes like the Amazon or it becomes like a Google, and it's gone, and 25 shares over splits might become 100 shares. But that's how you look at it when you're looking to invest in a stock and say, I'm just going to buy $1,000 in your portfolio of $100,000 if it's one of your names. That's how I would think about it. And I think this is one of those names. This is one of those names where they have technology that it's either going to change the world or it's not.
Right.
So it's an option. We're not talking about a $40 option. We're talking about a dollar amount option that you're willing to play. So if you put in $1,000, it can be worth in the future $30, $40. Fair enough?
Yep.
Okay.
Nice.
So just, I thought it was interesting. I thought it was something interesting because we talked about it here, call buying, big call buying, and then a secondary, and then on the secondary it trades at 40, but never really trades to 40. So people got it and the stock immediately went up. So it struck me as something that was interesting. Today they met their milestone, and Volkswagen has to put in another $100 million. So they have big money behind them, big investors. Just a name, it's always one of those names like you have 20 of them, and this is how some people invest. It's like it's like trying to find the next Amazon. If you buy one, you might miss it. But if you buy 20 of different types of names and you only put $1,000, after 10 years, if 2 of them turn out to be worth $20, $30, then your portfolio grows. It's the same mentality in private equity. That's what they do. They invest in all of these little fintech companies. One of them blows up and it's Uber or it's Robinhood, and then they make their billions of dollars. So same mentality, same thing here. It's an options mentality, probability mentality. Cool. Okay, so that's QuantumScape. The other one, which I mentioned earlier, was pins.
Yep.
So we see pins. Did you see pins today?
I see
pins. Yep. Let's see which ones they were.
I saw it in April
on the board here. Okay, so April. So the stock was up here, and we had these trade, the 85s. I looked at it. At first, I thought it was selling. But further look at it, it looks like it actually might have been buying. They came in and they bought these, vol was about 55 and a half yesterday, and they came in right around 11-ish, and you see they paid 103. They paid, so I'm looking first at IV right around 11 o'clock, and 11 o'clock it's 52.4, and by the time they're done, it's 56. You see that? 52.4, 56. I do see this bid here. So you can't, this is why I tell people you can't just look at the bid, okay? The bid offer, because you might say this was a sale. You see 100% on the bid, 100% on the bid, 100% on the bid, 100% on the bid. If I start here and I look at 11 o'clock, it started just moving higher, then it's likely that this was a buy. Let me walk through now the way it was moving, and you see that the calls trade 103, 557 on the offer, take 103, 61, take 105 on the offer. Now 105 is on the bid. That means that the customer is bidding 105. So he takes 103, takes 105, he's bidding 105, 105 trades on the bid. He's still the buyer. Just because it traded on the bid, he's the buyer. He steps away for a second. 5 lot trades at $1, meaningless, 105. He's paying 105 for 800 more. He's still bidding. 106 trades in front of that. Then 105, he's still bidding. 105. Remember, he started at 103, took 103, took 103, took 105. He's taking 105, and then he releases it. It looks like for a few minutes, the stock was actually trending lower. So you see the stock going lower here from 74. So stock's going lower. So then he steps in, stock a little bit lower. He steps in with probably the offer comes down with the stock, looks like 50 cents lower, and he pays $1. And then it's even lower. He pays 95 and $1 here with the stock a lot lower. You're talking about 80 cents lower in this. That's why the volatility went up. The stock is 80 cents lower. He's still paying close to what he started paying, 103, 105. So that's how you verify that it was actually a buyer. Whether he thinks the stock's going up or he's short the name, that I have no idea. But just verifying whether or not this is a buyer, that's how you do it. Even though it looks confusing here at first, it's the implied volatility going up, which is the first clue. This gives you mixed signals because this is on the bid. If this was all on the offer, that would verify it. Because it's on the bid, it got a little confusing. I said, let me go through it. And then I went through it just like I did with you. He's paying 103, paying 103, 105, 105, pays 106, 105. The stock is starting to go down. He releases it for 6 minutes, comes in, pays $1, pays somebody pays 101, and then over here it's 95 and $1, but the stock is now almost $1 lower from where he started. Okay, so he is a buyer. So that is a buyer in April, 85 calls in Pinterest, which means what? So now that we verified it's a buyer, what does it mean? Well, it means this guy's thinking 91, let's say, call it 91, 92. So, that's a monster move. That's 14%. So why would somebody think that? Is somebody thinking that high? I don't know, but I do know that I love the stock. I think Apple buys them at some point. That's my overall 5-year view on this stock. But I think Apple should buy them. Microsoft, any one of these guys that wants to get into the social media platform. The breaks through the 50-day moving average here. And again, let's just frame this so we know where we're at. We got a stock here that is clearly something's going on here at 62. It doesn't have to be perfect. You don't have to be perfect on this type of stuff. Let's call it 52. Also found some sort of you have it here and then some support here. But here's the main level, 62. This is a gap here, but it closed that gap. Here's a gap that still needs to be filled. So then I would say something like right over here. Okay, so this is how I'm framing the downside. But then we also got to do the upside. And the upside is, you're looking essentially at 90. We were building something right around here. For whatever reason, you can see this line right here. You see that line?
Yep.
Right? Where you have starts here with this break up, sort of support one day through, support again here. Okay, and then it breaks down here, reaches this, comes back up. Okay, resistance, and now it looks like it's trying to break through today. Okay, right here. So this is potentially a breakthrough on this area where now you get to 405 in the market, and this stock starts trading back, and it could easily recapture the 84 to 90 level. This person thinks if that's the case and the market does hit 410, which is, it's only 2% higher, really 2.5% higher from here. You could see these stocks overshoot to the upside. So you could see a quick move if there's any positive news. Any positive news with the market going to 410, and this could easily get into the 85 zone is where I would call it. So call it right around. There's something going on right around here, but I would say 85. Let's cut this in half. Okay. So this is an 85 call. It's a very quick play. So they're either looking for something quickly, which is probably one, the breakthrough, a real breakthrough in the SPY and the S&P through 4,000, or some news that they're looking for. I'd have to look at some event, but we're long Pinterest. We like Pinterest. This is a name that is no longer about. I don't think it's any longer about how many people they'll get on the platform. While that's going on in the background, the new story in these names is, can they monetize? Right? Can they go from, we got 1 million people this month, we got 2 million. The market's accepted that. Now the market's saying, can you make money? And if you can make money, we're going to take you up a lot. We're going to really reward you. And I think Pinterest is one of those things, one of those names that, I think they're going to win. I think they're doing the right thing. I think it's a feel good stock. I think that you saw that YouTube is actually testing to take out dislikes.
Right.
Yeah. And I think people getting the idea. It's like, at the end of the day, when you want someone on a platform, sometimes passion and positivity and learning and engaging ultimately works well. There's a lot of people that are negative people, just want to bash everything and keep things down. And I think that the social media, first of all, it's not good for advertising. That's why Pinterest is that people love advertising on Pinterest, right? It's feel good. Hey, while you're painting, have a Coke. You know what I mean? Like, okay, like people can not like while you're bashing, getting into fights and Coca-Cola is trying to throw in like, hey, did you try the new Diet Pepsi or the new Diet Zero Coke or whatever? These are things that I think about where people like to be in the long term. in the long term. So I think Pinterest just for that is a winner, and they're doing well with all different attracting men. So I just think it's a great story. When I see the 85 calls in April being bought, that's a big move. I'm not sure I believe that move will happen, but somebody is looking at that. Somebody is saying, no, this is a real shot. I like a little bit longer term. I'd like to see the earnings. I think the earnings will be good. I think the stock could recapture that 92 trade 110. It's a real possibility. I don't know about the next 2.5 weeks. That I don't know. And we're going to need a good market. So we need a good market and Pinterest with a good earnings, and you're going to see it fly. Okay. So a lot of ifs there, but that's how you play these options. That's sort of the mentality we're going to need to incorporate. What else you got?
Fair enough. So I've seen something in MU, and it looks like a different sort of a strategy. And you've been talking about these, different strategies for the last couple of days. So I just want to run it by you and ask you, what do you think about this?
MU?
Yes,
Stock's
MU.
up today, huh? What strategy you need? Just got to buy the stock and buy calls.
It's in May.
No, let's look at MU. May?
May.
Okay. 42,000?
It's like selling a call spread is what it seems. But
yeah, I see it. It looks like a 1x2 just by looking at it. It looks 10,000, 19,000. So maybe it's like 9x8. Let's just call it a 1x2. So let's just make sure. So buying. It's down a little bit, but I think they had good numbers. So that's why the volatility is down. But so buying looks like 420, 4.25. Okay, so they're paying on average. Let's just say they pay 4.25.
Okay,
they pay 4.25, and then is it the same time? Yep, and the spreads. See the spreads there, right? You see the spreads.
Yep.
And they're selling. See how this is here: 40, 40 and a half, 39 and a half. Okay, so looks like they're selling these. So 2.25, and let's just call it 90 cents. 90 cents times 2 is how much? $1.80. And 2.25 less $1.80, right? So that's
4.25.
Here, I'm sorry. We're looking here. What do we do? 4.25. 4.25 less $1.80 is how much? 240, 245.
Yeah, 250.
So you got 245. So 245 for the 95, 110, 1x2. Let's just call it 250 just to make that math easy. So 250. Okay, so somebody's paying 250 for that. Now, why would somebody do that? So, okay. Yeah, this is an interesting one because we've been talking about stocks like Viacom and GSX, so the ones that moved down, Discovery, the ones that had moved down over the last week with the blow up from Archego. And we've been talking about a different strategy where you sell puts and you buy this call spread. And we talked about it yesterday where you're doing that to really take advantage of some higher volatilities and the stock being down. So if the stock has even just a little bit of a bounce, volatilities will come down, which your structure would benefit your structure because you're selling 2 options and being long one, and the direction is going to help your direction of the strategy. So you win on direction, and you should win a little bit on that volatility, and over time you should win more on the volatility. So that's when the stocks are going out. Here we have a different situation where Micron is going up, okay, clearly up. And we've looked at this for a while here. 82.95, somewhere around there, right?
Okay.
And you have this move up here. So it looks like this bull flag, and stocks moving. If we had this range 95 to 80, 81 to 95 is how much? 81 to 95 is 14. So $14. So $14 range breaks through. 14 plus 95 is how much? 109.
109, yep.
109. Okay, so I would call it, let's just think somewhere up here, 109. Okay, this is 109. So that's where I'm thinking, can go. Now, why do people do this? This is called a 1x2 call spread. Okay, 1x2, which means I'm going to buy, where am I? I'm going to buy 1 of the May 95s, and I'm going to sell 2 of the 110s. Notice that there's no earnings. The earnings just came out. So I expect that I can't be surprised with some big announcement, positive announcement in general, right? There's no earnings. So usually you do this on this type of strategy when the stock has gone up decent amount. You like the stock. So you like the stock has gone up. Now you want a booster. You want to like a little bit of a boost your returns for the next 10, 15%, 20%, because you think that there's only 15, 20% left over the next 6 weeks. It's like you would be happy to get 15, 20% out of the stock in the next 6 weeks. And probably you'd be a seller up 15, 20% if the stock got up there this fast. So if the stock, let's go back to Micron. If the stock is gone, you're long it all the way up here. You're buying it, it goes up. We're here now. Stock goes to 110, and you're going to say, you might even have an order on the trader's desk saying, stock hits 105, 110, sell 1 million shares at 105, sell another million at 110. That would be a third of your position. Say you own 6 million shares. That's how they think, right? They if it gets up there too quickly, I might let some go. And then if it pulls back, I might be a buyer. Or they can use options and say, let's just do an options play where we can be long from 95 to 110 and long our stock still, and we'll get a boost on the returns. How does that boost work? So I'll give you the math. So if you do the 95 1x2, you're buying 195 call, and you're selling 110 calls. Okay, forget about the price. You pay $250. Forget about that for now. You buy 195 call and you're selling 110 calls. So what I want to do is I want to take one of those 110 calls. I want to take one of those 110 calls out. So that would just leave me with the 95 110 call spread, right?
Yep.
So that's one position. Now the 95 110 call spread. So I took one call out. Now I still have this 195 call that's outright for sale, right? But I own stock. So I really have this buy right on. So I have the stock at 92 and I have this 110 call for sale. So I'm stopping my profits at 110. So basically, if the stock goes to 200, just to the extreme, on my 92, on my buy right, the 92 stock and the sale of the 110 call, I'm going to make $18, right? So we're going to make that 92 to 110 is $18. So I'm going to make $18. What am I going to make on my 95 110s? Well, that's going to be worth $15, right? That value of that's going to be worth $15. So net, I'm going to have $33 in value there that I've made in profits, but I paid $250. So net, I make $30.50. Okay, up to even if the stock goes to 200, I've capped myself out at 110, but I doubled the amount between 95 and 110. So I made 95 to 110 on the stock, and then I also made 95 110 on the call spread. Right. So when you break it apart, you could see it easier. Okay, so by breaking it apart, you can see it easier. So net, if it goes to 200, I make 30 and a half bucks. So what I ask people to think about is that structure works. Where's your break even? So I would just add $30.50 to $92. And if I did nothing, and I just have stock at $92 and it goes up $30.50, then my stock would be $122.50, right? So at $122.50 is sort of where above that, I would have done better on the stock. So if it goes to 200, I would have made $108, much better than the $30.50. So that's how you start thinking about, and that's how these big guys, they start thinking about, where do I think the stock's going? Where am I a seller? He's probably doing this because he's probably thinking, I'm probably selling some stock at 105, 110. If it gets there in the next 4 weeks, 5 weeks, I'm going to be selling, right? And so that's risk reward and trying to give yourself a boost on your stock position. Okay, so they do these 1x2 call spreads, and they do it on top of their stock. On top of their stock. So usually they like it and they're doing this as a booster. They only pay $250 and they're buying these calls for the next 6 weeks. Now, if the stock goes to 105, what do? Well, they keep the stock that they had and then they sell this structure at about $10. So they literally take $250, they ride it to 10, they sell just the call 1x2, they unwind that at around $10, and they make $250, $750 over $250, make 3 to 1, 300% on that. Because they own the stock. Owning stock gives you mobility, gives you the ability to actually, mess around here, there, and whatnot. And
Mhm.
we were talking yesterday about stocks that drop, and that strategy. This is a strategy when stocks go straight up, they're here, they break out, and someone is interested in selling. So you have this, you're capped, but they believe they're capped anyway because they're going to be putting pressure on the stock on the way out. This is why it's good to be one of the guys that has 20 million shares. You can do this and not worry about it and clip little, $1 million here, $2 million there, whatnot, because they're going to be holding the stock or want to hold the stock for the next 5 years. So, that's two. Now, UOA is another strategy, but UOA is not something they use. So people get confused and say, do the big guys use UOA? No, they are the UOA. They are they are the sharks.
Mhm.
We're using it as a strategy to piggyback and look at what they're doing. So that's the difference. It's UOA is something that we can use to piggyback what they're doing. But what I'm showing, and where over time now, as people start understanding more and more, that we will explore other strategies that the big guys are using that we don't have to do ourselves, but they give you a lot of information. So the more we know about these, and I'm trying to introduce them, we're in episode 56, and I'm just starting to wean into sort of different strategies, is because you got to get comfortable with just puts and calls and understanding. And now we're starting to wean into these 1x2s, whether it's the put 1x2, call 1x2, whether it's the sell put by the call spread type of trade. When people do these trades, what do they mean? Why do they do these trades? And how do you win doing these trades?
Mhm.
It's important. Okay, it's important. So in Micron, again, the 1x2 gets you. I want to show you one other thing too. You see that right here? 3-month sentiment bullish.
Bull bear. Yep.
Bull bear. It's leaning to the blue. It's where the blue line is leaning towards bull. That
Mhm.
means the upside calls. Bull means the upside calls are bid.
Mhm.
They're buyers of these upside calls. So this person is using a strategy not only to get direction. He likes it. He wants to be long, but he's using a strategy where he can get long, but he could also sell the people those high calls.
Mhm.
Because you see that bull line, it's showing you that the sentiment is that people are reaching for those upside calls. They're reaching for them. They think Micron's about to explode. They're reaching. When people reach, that's when you sell.
Mhm. Nice.
Okay,
Nice.
so that's it's going to take a few times to understand it, and I will go slowly over the next couple of months. We will see some of these trades, especially when do you see these trades, especially in a tape like this that hasn't.
Mhm.
It's starting to shuffle around. People have made a lot of gains. They're trying to figure out ways. Maybe the upside might not be as rah as you think, and it might just creep up, but they're positioning themselves in a way to start making money with, instead of the major moves, in some of the names that have already moved, a little bit shorter. But we'll see. That's the difference between when they're just buying calls or just buying puts. They're thinking of massive moves up or down. When they're buying call spreads or 1x2s, or they're very specific on where they're going, on what's happening. So
Mhm.
that's my 2 cents today
Nice.
on
Nice.
different
I love it.
strategies.
I
Okay.
love it.
So take a breather. If you didn't understand any part of it, go watch the video again.
Mhm.
And it's baby steps. We're showing you something new. This isn't, this is why, and I'll say it again, you have to know 3 steps. You have to go to 3 steps of profits. You have to understand the value of options, the really understand them. Not, yeah, calls, puts, I get it. It's like really understand what drives them, because when you start getting into the other strategies, remember, not any one strategy that people use is going to be a winner. You can't just say, oh, this is what I do and it wins, or this strategy is a winner. Every one of these strategies, there's give and take, and there's opportunity in when you use that strategy,
Mhm.
in how you use that strategy. In order to understand the when, the how, and the why, you have to understand what you're taking advantage of. And in order to understand what you're taking advantage of, you have to understand options, and you have to understand this options chain and how things move, the different strikes, implied volatility to some extent, skew. All of these things are in 3 steps to profit, and you have to get a real sound understanding. When you do that, that's what I keep telling you, that your education is going to go 10 times. You're going to start seeing things a lot clearer. But the basics are important. All I care about is the basics. You're not good at math. Can you add 3 + 3? Yeah, you're good. You're fine. You're fine. This isn't hardcore math. I'm going to show you over time how the board is moving, how things move, how to, the power of what I built on the new options chain. It's a simple little tool, but there's a lot of power behind it. There's a lot of things you can gather in information just by looking at it. And when you understand things and you start seeing it, the more reps we get when we're doing this each day and showing different things and different strategies people doing, you're going to see that. Now, you know what? We should actually take account. Okay, we're going to take account for this whole year. Okay, so far, episode 56, I have not seen one iron condor 10 by 10 by 10 by 20 by 10 by 10 by 10 by 10. Okay, which is, sell the put spread, sell the call spread. I have not seen one. So over the course of a year, we're going to see how many iron condors we actually see on the board. Okay, if we get my over under is going to be 1. That's my over under. I would have to, because I'm a betting guy, I would have to say 2.5. 2.5. I'm going to need that half just in case we find. But we're talking about millions of trades that happen each year, and and as far as the big guys in UOA, show me 2. If you win a prize, maybe I should have a prize. If you show me an iron condor 10,000 or more, you get a prize. Show it to me. Because everybody's teaching these iron condors like this is the way everybody should trade. And I'm telling you that not one, I have never traded in my personal life, in my career on Wall Street, I had never traded an iron condor for a large institution. Not saying that 1 or 2 don't do it. And I'm not talking about the hedge funds that trade volatility. That, I'm talking about a directional guy that's saying, okay, this is the trade I want to do. There's not going to be many. You're not going to find many. Maybe somebody sells a straddle every once in a while. I had done that. And when, by the way, when a directional guy comes in to sell a straddle, you're like, wow, this never happens. Like, let me really sharpen my pencil here. Why is he doing it? One guy I can tell you, a major hedge fund, big guy, one time sold me a straddle and got me pretty damn good. Sold me a straddle and like after buying it, it didn't feel good. I made the price and there were no buyers in the thing. And I went to the market and it was like 60,000 straddles and I had to buy like 59,900, which meant it was I made the complete wrong price, and you can't get out of it. The volatility was compressed. We can go into that story another time, but yeah, I mean, like when a hedge fund who trades direction comes in to sell you a straddle, your eyes and ears, but your ears better perk up and your eyes better get laser focused on why is this guy doing that. So anyway, that's my 2 cents. But anyway, let's go on.
Awesome, thank you.
What else?
I've seen some Dropbox. You want to jump into that?
Dropbox, love Dropbox. Dropbox is again a name we're long. We got the Aprils running out of time here a little bit, but usually, they bought April for a reason, and we're hearing, look, there's no coincidences in this world, in my opinion. Everything is somehow connected somehow. And, a few months ago, you were hearing Dropbox. Maybe I was talking in my sleep, hearing it to myself, but Dropbox, rumors of that maybe they would get bought out or somebody would buy them. It makes sense to me, Dropbox, that somebody would come in. It just makes sense that, you look at the leaderboard of cloud storage companies and you got like Google, Amazon, like number 15 in the world is like Dropbox. It's like so different. The market caps is so different. So it's a tiny player that somebody could just eat up and stick, as an addendum to their business. And on top of that, they have this workspace. So we know that Slack got bought out by CRM. So there's real value in these workspaces. And then I just thought, Google seems to be like would be a great match. They have their cloud storage business. So you take that on, and then they have, and plus DBX has an enterprise business. And then on top of that, you get the engineers, right? The technologists that are building these workspaces. It's a certain skill to do that. And they've done it. They've done a good job. And, there you go. And how many products does Google have that you use? I mean, I use Gmail, YouTube. It's not really a product, but YouTube, Gmail, but all the things, they get beat surprisingly by most people. And a lot of these little products that they use, how good would all those products be in a workstation? To me, that is an interesting tie-up between the two. Then you got Box, BOX, and I think there was some Box activity the last couple of days. Their rumor, an analyst came out and said, he saw 40, 50% upside in Box. again, cloud storage in that space. These names, more people use all types of products in every industry. The more storage we're going to need in the cloud, and the more this becomes, that's why the chips are there, and that's why you have all these cloud names soaring. So I love DBX, and if we're looking at the stock here, looks like the Aprils might be somebody getting out of the 30s here. It looks like just getting tired. But what do you got? The April 23s. April 23s, like, all right. So I see this. Is this a buy?
Seems like it.
Look at that. Yeah, so it looks like a buy without even just going through it. But yeah, 47, vol up, 42, 47. Yeah, so this is a buy. Okay, so here's what we should think about. Somebody wakes out of bed this morning and they're going to buy 9,029 calls in Dropbox, more importantly, on April 23rd. Like, why would somebody come in? Why not? Earnings are May 7th. Why not May 21st? Why not the Mays? Or like, when the big institutional guys, they worry about liquidity. So, regular April options and regular May options are usually what they'll trade. So you see the May 11th. Let's see here, May 11th. You're looking at the 27 calls here. So people are reaching here for upside calls, not reaching, I mean, they're buying upside calls in May and then in April. But the April 23rd, like, why would somebody do that? To me, I'm interested, and I want to see why April 23rd. I want to see, is there an event happening? Is there, maybe they said something, maybe they announced that they're going to do something or something. I haven't seen the news, but that right there is very specific. April 23rd. What time? I mean, is he going to tell us the time too? Like, we're looking at April 21st at 2:00. Like, what's happening? Why April 23rd? So I think that just strikes me as interesting, just because of the strike, the expiration that he chose. But the stock has been bullish. It's been trading very well. Let's get out of this Micron. The DBX. Why do I always do that? It's like always forget to go over it. Okay, so we have, this stock's just been trading well. If you look at this, people like, I mean, the people who love the stock are calling for, $30 to $40. But you have here clearly 21 3/4, 25 1/4 is how much? 3.5. 3.5 plus 25 1/4 gets you to 25.75. So somewhere around here. It's already hit 28 1/4 and was rejected. Came back to this sort of breakout. Found some support here. Okay, so after, you got this goes through, comes back, it pushes up, and probably looking somewhere 28 3/4. But you then have, what you're looking at is something like this, which is 22 1/4. And remember, we're talking about several months in this range. So you have this at 22 1/4 to 28 1/4 is $6. $6 plus 25 1/4 is how much? 31 1/4. So I would be looking at a breaks 28 1/4 to get quickly to 31 1/4, call it. So that's how I would look at a target, where you have this A, B, C, D moving up. But again, you have this 35 1/4, 21 3/4, 3.5, 20. So right around here, you're going to get some, we have this range, 25 1/4, 3.5 right here. And then you add $3.50 around here. So move this up to, 28 3/4 before I make too much of a mess here. So, yeah, so I could see the call buying. I could see why they're buying it. Again, we're gonna need a good market, and that April 23rd. Let's try to figure out why April 23rd. Okay, why April 23rd? So maybe somebody could tell us why April 23rd. They figure that out over the weekend. What else?
One more I saw was Snow.
One more, Snow. Okay.
Yeah.
Snow. Interesting. Before we even look at it, let's just look at something here. So clearly 430, right? Trying to find a range. But then there's something developing here. It looks like IPOs comes out here, and then we have this 210. So This is obviously a sort of trend line going down here. And I would look at this right here. See how it's found a little bit of support, and then over here kind of broke through, came back, danced around here, and then dropped. So, for some reason, 270 seems to be in line as well. But, you have this downdraft. Let's get rid of that. I highlight that to kind of just show people what you're up against there. The 50-day is here, so you want it to be above 260 to get this 50-day starting to move up. But 210 seems to be a level. What are they doing? Buying calls? I would suspect buying, let me guess, like 260 calls, 250 calls. I don't know. I would guess that someone is trying to look 250. I would guess that someone's trying to play to get above the 250 to get back above here, bouncing off this 210. So this is a range, 265, 210. So it's $55. 55 bucks plus 265 gets you up to 320, which is somewhere up here, right? So that's why I would say they're looking at, let's call that right around there. So we're looking at 210, 265, 320, somewhere around here. So what are they doing?
It's actually April 9th.
Next week?
Yeah.
Oh boy. April 9th. April 9th. Huh? Wow. 250 calls. They bought them here. How many did they buy? 5,000. Was anything else in this month? Oh, the 242s. So 242s. All the same ones. Are there spreads here? Oh, okay. Looks like there might have been spreads. Some spreads. Okay. So this is about 1,000. Okay. So it looks like, what were they doing here? IV's down right around here and then shoots up. So they came in. Let's use the time here. In the morning. Bid. 47.9. I'm looking at this. Implied vol was 47.48. So 47.9. Looking at the price too, 49. IV's going up. Where's the big ones? IV comes down for 16. 50. Okay. It's a little, because there's spreads, it's always difficult, but let's just say, let's look at that. I'm not confident to say either way, to be honest. It looks a little bit like a buy. And then what do we got here? So 3,000. Okay, so these are not spreads, so it's not even that one that we were looking at spreads. 52, let's go again by time. 31, 49, 50, 52, 54. Okay, so this looks like buying. It might, this is a spread somehow, so I don't know where. They might be just going into May's here. Let's see the May 21s. We'd have to do some search on where that spread was. I'm not sure where that, you have to look all around. It might have just been from April to the second, to the next week, to today, to the next week. But this does look like it's a buy. I'm concerned about what this is and how this all relates, like 240 versus that. But like if they are selling something to buy to. But yeah, I can go with this. I'll buy at 250, looking for a breakout in the market up to 3%. They're going to come after names like this name. This is a very popular name, was very popular, went to 450. People think they get it at a discount here. It's a software data. I think it's software data. I don't want to overspeak on it. I don't know too much about these major cloud software names, but I think it's visualization of data, and they just do a better job of it. So, they go into a company, they take all parts of the company, and they, if you have data coming from here and data coming from there, they put it all together and help you visualize it together. I think that's sort of that's my understanding of it. And it could be very powerful. It's powered by machine learning, blah, blah, blah. So Looks interesting. It's a big dollar amount. This is 550,000 times 250 is 1.3, $1.4 million in premium at the 250 line. So yeah, it looks interesting. I hate the 1 week options, but it looks interesting. I'll just leave it at that. I think this is what you're looking at here, and 250 to here, for example, if you get a bull run here, here's a baby one, right? So you're looking at 205, right? 205, let's call it, to 235 is how much? $30, right? And then it got back to 215, so it went down to 215. So $30 plus 215 is 245. So this move above here can get you to 245. And if it gets you to 245, it would have break 240. It could probably get you closer to that 50 where he's sitting and he wants to get here. So I think it's going to need an announcement. It's obviously going to need a good market.
Right.
1 week is 1 week to me is a little bit tough unless they know something is on the horizon. But it's spending a decent amount of premium, 5,000. Obviously it's institutional. So yeah, it looks interesting. I would say it looks interesting.
Cool. Awesome.
All right. Awesome.
All right.
Anything else for the weekend? I'll give you one more. Actually, one that I will talk about that I saw that was interesting. FUBO. So FUBO, there was some upside call buying we've been seeing in that name. FUBO is a name that we have taken a lot of heat for being somewhat negative on it. Not that we're negative people, but it's just when the stock goes from, let's take a FUBO. I mean, I want to believe in every stock, but when a stock goes to, I'm a buyer of stories, and I love story time. But when a stock goes from, $8, $10 to $62, and does this, and I see it on this side of the mountain, and I'm telling people that, when you get here, if any pops, the shorts are going to be on this, and sure enough, they've taken it down to 22. There's upside call buying in this for the next couple of weeks, which, you always got to worry now as an investor. If you're short names, why would somebody buy these calls? But it looks like they were buying April 9th, 28 calls here. 12,000. You're seeing some up here. They've taken the vol down a little bit, but this morning it was higher. And now they've moved it down. I guess the buying has subsided a little bit. So we're seeing some call buying in FUBO. I don't know. I guess they got some deal today. This is not something, to me, not something groundbreaking. And I think their audience is limited. So, you're talking about in order for stocks to go to the moon, you need a story that allows the stock going to the moon. How many men within the age of 20 to 45 that sit at home watching sports all day and then gambling on the sports game while they're doing that? You start narrowing down that field of people, and that, it's not like how many people drive a car. Oh my God, how many people in China? Oh wow, I can't even get. It's not like that type of story. Here you could say there's 68 people in the United States that do all these 10 things. So it's like, okay, so FUBO is going to have 68 customers. I don't know. I'm concerned about stories like that and valuation. So when I see valuation go up like this, and I say, tell me the story and let me believe. I'm a believer. Tell me the story. If you're going to tell me it's this, guy who's sitting at home in the basement while his wife's upstairs watching Netflix and he's downstairs screaming at the TV, yeah, that works from March, March Madness for 2-3 weeks. After that, it's like, 40-something-year-old men are not usually down there by themselves gambling in the basement, usually. So it's a very, very smaller community of people. And I would suspect, especially watching a baseball game for 3 hours, I mean, I don't know. That's the story I heard. Maybe someone's got a better story, and I'm open ears to it. But the valuation is still pretty high, and you got a lot of short sellers in this. So this might be. That doesn't mean this stock can't go up. I don't want to say that. I'm simply saying that this could be a setup where, we've seen it before. So if someone is short the name, you want to pay attention to these, baby calls, and then other calls coming in 1 week, 2 weeks, because that's how they do it, right? They do this to create a little bit of a gamma squeeze where the stocks, they start pushing the stocks so they get everyone to buy, remember, 1 million people buy 100 shares, you get 100 million shares to buy. It's going to knock out shorts, and then the shorts get scrambling. Then the calls come into play. They come valuable. Deltas go up, and there you got your short squeeze. So I would pay attention to it, is what I would say, that FUBO.
Okay.
All right.
Great. Awesome.
Awesome,
Sounds
man.
good.
Listen, have a
Thank
great
you,
weekend.
Felix.
Okay.
Thank you. You too. And thanks, everybody.
Bye-bye.